Betfair trading, the only betting strategy that never loses. Well, I jest, of course, because you can lose, and I do lose, and sometimes in a sort of trolly sort of way, people say to me, do you ever lose? But the fact is, I have discussed it before, and I'm going to discuss it again in this video because it's an important part of long-term profitability. If you're interested in learning to use Betangel, head on over to our website where you can download a free trial. If you're interested in learning how to use it, then head over to the Betangel Academy where you can do exactly that. And if you want to talk to like-minded people, then head on over to our forum. So now and again, I will post up screenshots and images of trades that I've done or interesting days and stuff like that, especially around the major festivals. And one of the key reasons that I do this is because I want to show you that I've got skin in the game. I'm taking risk. I have enough faith in what I do that I'm prepared to put my money and lots of it into the market with the expectation that I will be able to profit. Because people have lots of opinions, but very few people are willing to follow it up with action. So yeah, that's why I post up screenshots and images of certain trades or certain days and stuff like that. But necessarily, and you have to expect this in the modern world, now and again I get some negative feedback from doing it, and one of the most common ones is, do you ever lose? And the funny thing is that very often those questions get asked at the most inappropriate sort of moments. So somebody fired that retort at me recently at the Grand National, and if you look at my history of activity within the Grand National, one of the things that you will find is that I hardly ever lose on the Grand National. And that's because there's a correlation between the quality of the racing and my end trading result. And especially on something like the Grand National, where there's good liquidity over the course of the entire day, and I can trade in and out of the market repeatedly for good volume, those are the perfect trading characteristics for my trading style. So it's very likely that I will win on a big event like the Grand National. So in fact, over my entire career at the Grand National, I have only ever lost once, and that was completely down to me. It was just a cock up on my behalf, and I just had to take it on the chin. It's like when you reach those critical moments where you make a mistake and you sort of think, well, that's unfair, or something happens in the market that's unfair. One of the great strengths you can have as a trader is to basically go, well, you know what, these things happen, and you basically take the hit and then you move on. And I had to do that one year in the Grand National. I've actually forgotten how much it was. I will have to check, but I think it was somewhere in the region of about £120. It wasn't a big loss, but it was a loss nonetheless, and it hurt because, you know, wouldn't it be magical to have never lost on the Grand National? But the fact is, I did. But in most years, and again this year, I managed to pull in a decent result. But that is because the Grand National is unique in that it's one of those events where the conditions are pretty good for trading. And again, in March, you know, I had the Cheltenham Festival, which you know I love, and again that has very good trading characteristics. And funny enough, during the Cheltenham Festival, when I posted up a screenshot, somebody said exactly the same thing. It's like, oh, you only post your winners and so on. But what a silly time to do it, because again, at Cheltenham I have an outstanding track record, and again it's because the characteristics of the markets are so favourable. So yeah, overall, and I have talked about this in the past as well, when you look at day-to-day racing, I expect to lose, you know, probably 30% of races on average. So some days I could have a really bad day and end up losing more than that in terms of percentages. But generally I would expect to lose on average about 3 out of 10 races. Sometimes when the liquidity in the markets are weak, I may make more mistakes and that loss race goes up. And when we have really good days, like today, then my loss rate will begin to fall. And there may be days when I have no losses at all. Some of that's down to a little bit of luck within the market and the situations that present themselves. But generally speaking, there's a direct correlation between how often I lose and the quality of the markets in which I'm trading. But one thing to realize about losses is that trades are part of the game, but so are losses. Losses are key to being able to manage your risk, because when you see a loss, you shouldn't be attempting to avoid it. You just realize that that's part of the way that things work. And overall, when you're trying to get a positive expectancy in a trading or betting market, you're looking at how often you win, how often you lose, how much you win and how much you lose. And it's those four things. It's not just winning more than you lose. Your strike rate has a role to play there as well. And you see this, when I look at a ladder interface, I'm looking at that traded range and I'm thinking, well, that's the total potential opportunity. But I'm also looking at it and thinking, well, that's the total potential downside. So if I get into the market at roughly the right point, I can limit my downside and have full upside potential, or potentially full upside potential. But the opportunities vary from one market to the next. So one of the things that I do is I do actually vary my stakes as well. So if my confidence is high, i.e. at a Grand National or a Cheltenham, then I will basically use larger stakes because I have a feeling that everything is going to work out just fine, so I maximize my potential opportunity. But if I don't have much confidence in the market, then I will reduce my stakes and I will keep them low because I know that my strike rate will be lower by default, and I've gathered that data over a number of years, and therefore that's a good way of minimizing losses. Okay, I miss out on a few opportunities, but I know it's a lower quality opportunity, so I'm prepared to miss out potentially on those bigger gains in order to minimize my losses, because I know on average that's the thing that's more likely to happen. But yeah, it's a balance of those four factors. I have done a video on this before that I've talked about in great depth, so I'm not going to reprise it here. But basically, it's all an interaction of the amount you win when you win, the amount you lose when you lose, and the strike rate of your wins and losses that gives you overall profitability. You can have a strategy that wins and loses the same amount, but if those strike rates vary, I'm not going to overcomplicate things here, you can still make a decent amount of money. So what I'm trying to do is minimize the potential for loss, but accept that a loss is going to occur, because sometimes you go into the market, it is completely the opposite of what you expect, and sometimes just weird things happen. So you have to account for losses within your trading system. You shouldn't be avoiding a loss at any cost. You shouldn't chase your losses. You just basically have to accept that there's a rate at which losses occur. You try and put yourself into positions where that's less likely, and that's a good way of balancing out that entire equation. Think of it like a set of scales, really. You're trying to maximize the opportunities that are there, but minimize any of the downside. But when you look at the way that the market plays out, you've got to accept that, losses are part of the game. And when you look at losses and you look at the way that you integrate that into whatever system that you're doing, come to terms with it, because that will allow you to take a loss much more easier. There's nothing worse than having a loss and then trying to desperately avoid it somehow. You just have to accept that sometimes things go wrong. So I have done a video specifically on a trade setup that is exactly the same, but it works on one and it doesn't on the other, and you see me exit for a loss. And you'll see how I manage those positions. I don't change my demeanor or behavior within the market. I basically accept that the situation has deteriorated and I just try and exit for the smallest loss that I can. Pretty much in the same way that I would have got in, or that I would get out if it was a positive trade. I'm just trying to basically make sure that I don't let that loss get too big so that I can manage it overall. But I have looked and done some videos specifically on data that I've gathered and giving you a deeper dive in terms of what my P&L looks like. But basically what you see on day-to-day events and racing and whatever I'm trading is you tend to see a mixture of profits and losses, and when you look at the spreadsheet data that comes off, it sometimes looks a little bit random almost, but you're basically seeing that in effect over a period of time. You're basically seeing me maximizing opportunities when I see them, trying to cut losses when they occur, and the way that I do that is basically reducing stakes, getting out of a position when I realize it's deteriorated, and I manage the whole situation like that. But overall, that generates profitability. And one of the ways that I suggest that you minimize losses is when you first start trading, you'll probably have quite a few, and you should use the approach that I did when I first started, which is that I would trade continuously using a certain type of strategy. I would identify where those losses are, if I could correlate and understand why they occurred, and then I would basically change my trading style or not trade those markets. That was enough to get me profitable in the first place. The simplest example that I can give you is if you're attempting to scalp a market or go for a one-tick gain, you need to trade markets that are within a narrow traded range, because the opportunity doesn't go away, but the loss does. And if you go in and trade, especially at this time of the year when I'm recording this video, we'll have loads of new 2-year-old maidens out on the race course. These horses haven't raced before. People are going to be guessing basically how they could potentially run, and therefore the markets will be pretty wild. So you wouldn't tend to scalp those sort of markets. You're going to have to look for another solution as to how you're going to actively trade those markets. If you do scalp them, you'll get quite a few one-tick gains, but when the losses come, they will be brutal. So just by having a look at the data that you have collected on your particular trading style, you should be able to identify where those big losses occur, and then you can begin striking them out if you can see a pattern within them. And more or less that's exactly how I trade. I never profess to know more than the market. I work within inside what the market gives me, and I'm just trying to carefully manage that risk within the market and gently tip it within my favour. But part of that process is basically accepting that there will be losses, trying to minimise that they occur, or the amount that they lose when they do occur, and not doing anything special to sort of try and recover them, as it were. I basically accept that a loss is going to be there, and that is part of my overall mix. But what I'm telling you now is that you must come to terms with losses and put them in as part of your system, because there's no way that you can avoid it. Even if the best trader in the world, they're going to occur sometimes for reasons that you will be completely unexpected. And the quicker that you come to terms with that, the quicker you'll be able to cope with losses, and the more you'll be able to focus on good trading. And if you do that over a long period of time, you'll almost certainly end up profitable. Anyhow, I hope that video has been useful for you.